I'm actually
Mm.
more of a beer wine girl, and the beer in Colorado is amazing. But I would say the biggest misconception is having no credit is going to hinder you on purchasing a home. I just tell folks don't make any large purchases prior to home shopping. And if you have bad credit, it doesn't mean that you don't have the ability to buy. It just may take time to.
Welcome to Jerome in Real Estate. I'm Jerome, your local realtor here in the Fountain and Colorado Springs area. Today, I have brought on Miss Misty Stewart, a loan officer and overall loan expert, to talk to us today about credit, credit scores, credit history, and how it all applies to purchasing a home, right? So, without further ado, I'm going to go ahead and ask Misty to go ahead and introduce herself. So, Misty, the floor is yours for a couple seconds.
Thank you, Jerome. Hi there, folks. Misty Stuart here with Fortitude Mortgage. As Jerome shared, I am a loan officer. I'm also an operations manager, so I oversee the processing side of our company. I have been servicing communities since 2003, so looking forward to this.
All right, awesome. So, if you could give us a little bit of background on you, tell us a little bit about how you actually got into the mortgage industry.
Sure. It was actually my purchase of my first home in 2002. I, at the time, utilized the FHA Access Gold program, which is not around anymore, but there's similar products. I got in with zero down. The Access Gold helped me with my down payment and closing cost. And the experience of it and seeing how much the loan officer and notary and all parties gouged me for being a first time buyer and not knowing, A to Z how the whole process went. I decided that I wanted to join the industry and be reputable and help first time home buyers and others, my peers, obtain affordable housing because I knew that it was possible and we didn't need to be gouged. But we do have
Yeah.
TRID regulations in effect now, which does prevent a lot of that. But when I first started doing loans, that was not the case. So that is how I became a loan officer.
Okay,
Yeah.
awesome. And how long did it take you to, start up to get through?
Um, let's see. I bought my house in November of 2002, and I was licensed by July of 2003 in California. California requires you to be a real estate sales agent licensed in order to be a mortgage broker. So I obtained that and joined a local a direct lender at the time when I first started my journey.
So, I mean, there's a wealth of experience that you've gathered since, 2002. So that's awesome. I really appreciate you being able to come on. So we're here to talk about credit and, the credit score, credit history. And if you could shed a little bit of light on how much of a factor the credit score and credit history is when, your average Joe comes to you and says, "Hey, I want to purchase a house." How much of a factor is that credit score?
It's actually a huge factor today. Many moons ago, it was not. We just had rates set for everyone. We just had to prove that you had the ability to repay. But in today's market, credit is a huge factor. It does affect your pricing. Depending on what your scenario is, as far as your down payment, loan product, ownership, if it's going to be second home, primary investment, those all play into it.
So let's figure out what a supposed good score should be, and how that plays into the actual loan itself, and what would be considered a bad score,
Anything below a 680 is going to start having substantial add-ons to your pricing. A 740 puts you at the elite, the top of the top, as far as there's not going to be any pricing adjustments for your FICO score.
Okay. And then what about the history, right? So people always talk about your credit history, whether that's good or bad. What types of things can ding your credit history?
Dinging your credit history could be going to a credit repair service. What they tend to do is send out a lot of dispute letters. You can't have any loan or any credit, any loans, any credit at all in dispute status, because what that means, it's going to freeze that account and it's not going to give your credit any rating. So disputing those, we have to remove those. And at times, yes, it could better your score if it's in a positive rating after the dispute is removed, or it can have a negative rating. So you want to do your best not to have anything in dispute at time of applying, or don't go pay off credit collections, because at times, depending on what the amount is and what the creditor is, we may not require you to pay it off. And at times when you pay off a credit collection, you're thinking you're doing a good thing, but what that does is it's going to refresh that credit reporting, and it's going to have a significant ding on your FICO scores,
Right.
as well as late payments in the last 12 months on any accounts. Acquiring new accounts, sometimes those affect because you're not only going to have the inquiry, but then you're going to have the new account that has a short history. Let's see, also paying off accounts and closing them. What you just did is you took away all that good credit reporting history, and that will have an adverse effect on your FICO score.
Okay, so I mean, this might be really interesting to anyone that watches this, right? You're saying that if you actually are a great steward of your finances and you pay all that, let's say it's one credit card balance, right? And you pay it all off and then you close that credit card down. You shut it down, you say, you know what, I don't want to deal with this credit card anymore. You're saying that that could possibly have a negative effect.
Yes, because it takes away all of your good history.
Ah,
So
nice,
keep it
nice.
open and don't charge it. If you do make charges on your revolving credit, it's always best to pay them off at the end of the month, or don't keep a balance anything above 25% of your revolving credit limit, because having a high ratio to credit limit balance also has an adverse effect on your credit score.
Okay, got you. So this kind of leads me right into the next question. And I actually have an example of it before I pose the question, right? You know, a few years back, it's not, it's more than a few now, you know, it's probably like 7 years or so. I have a cousin who wanted to buy his first property, right? And I mean, he was very good at handling his finances. He had tons of money in the bank, right? But he had actually never owned a credit card in his life. He didn't do anything off credit. So he literally had zero credit history, but he had a ton of money. But he didn't want to buy the house, you know, all cash, obviously. He wanted to do it the way everyone else does, but he quickly found out that because he didn't have a credit history, that kind of stopped the process, right? Like he couldn't get a loan because there was no history there. So my question really is, what's the best way to build up credit history, good credit history, if you don't have any history at all? You know, it's not bad or good, it's just non-existent, right? How do you fix that?
Well, in those instances, what we could do to assist to build that credit score immediately would to do non-traditional credit. So what we're going to do is we're going to build his credit history with his utilities. We're going to get credit ratings from his utility companies, such as your electric, your gas, your water, your cell phone bill. And then we're also going to get a verification of rent from his landlord or the property management that handles his monthly payments. We can establish credit scores non-traditionally through that route. If they don't want or need that instant credit rating, let's say they're preparing to buy 6 months or a year from now, what we suggest is you're going to have at least 4 accounts, and they have to be a variety. They can't be all credit cards. So you want to have an installment loan. You can have 1 or 2 credit cards with small balances to the credit limit. You can have an auto loan. You just want to have a nice mixture. So installment loan, couple of credit cards in there, and an auto loan, a secured debt. So if you want to apply for a credit card that is a secured debt, those are things that will assist you building up your credit score. That just takes longer because it takes 6 to 12 months to start building up that credit rating. But for someone who needs it now that doesn't have any traditional credit, we can help them build that through our credit service.
Okay, gotcha. And that
I
makes
got
sense.
that loan for that cousin of yours.
That was a few years back. He's all set now. He's
Right.
all set. We figured it out, and quite a few years back now. He's all set. So thanks for that explanation, by the way.
Sure.
Did you wanna chat a little bit about your particular credit building program you were just talking about?
What as far as the non-traditional?
Yeah.
What I do is once we collect all the data, and we will need the client to be an advocate for it because we cannot contact the utilities or the cell phone company. So they would be the ones to go and ask the utility company, cell phone provider to give them those ratings. And they're accustomed to being asked of that. They're familiar with the process. So they'll give us a letter with that credit rating. And we can also, if they're paying like a private note or something, we can also build that into the non-traditional. And then the verification of rent is something that I can obtain. I would just need their property management or their landlord contact information. I'll send a form, they complete it, return it. Make sure that there is a good 12-month history or longer. And then I send that in to my credit servicer, and they update the credit with the bureaus based on that. Clients can also do self-reporting of their utilities. They can log on directly to all 3 bureaus, TransUnion, Experian, and Equifax are the 3 bureaus. And they can do self-reporting of their utilities and start building that credit immediately while they are out shopping. And then I can gather information from them to help build that. But that's something I can work with them on. And if they, I'll extend this out to if they have low FICO scores and they want to build that up, what we can do is I have a simulator through my credit servicer who will tell me, do this to these accounts, such as pay down your JCPenney card to this balance, pay off this card, but keep it open. So it'll give me all these factors of what the client can do, and it'll give us an estimated credit boost. Like we can boost your score from 620 to 680 if you do all these actions. And it's not a quick process. It is something that when they have to work on paying down or doing what the simulator suggests. And then I have to then go in and advise, okay, we've done all these actions. Now give us a rescore, and we can make that happen. I've done those during the transaction. I always suggest let's work on that before, because at times the sellers don't want to wait the time frame that we need to make those adjustments.
Okay, awesome. So it kind of leads, I'm assuming it meshes very well with the next part of the question, which was, if someone knows that they have just bad credit, what do you do to actually patch that up and improve it, right? But it sounds like you basically just answered that question, right?
Yes, they
Okay,
would.
so building and improving are virtually the same.
Yes, I would run their credit report. It's a tri-merge for mortgage purposes. And I would run it through my simulator. If it's not something I can identify on my own, because having the wisdom of being in this business for so long, sometimes I can pinpoint them. But if I can't, then that's when I like to run it through the simulator. And then I can work with the clients of, okay, this is our game plan. This is what we need to do. And it does give you the time duration of doing this action in 6 months, your credit score can be this, or
Yeah.
in a year, it can be this. So I would happily work with them and guide them through the process and get their credit scores up to be where they need to. And then also give them advice of don't pay off this, don't close this. Because there was a time during a transaction where our credit report is good for 120 days. So if I pull your credit report and y'all are out there shopping and it takes you 2 months, 3 months to get that property, yes, your credit is still good at time of application. However, let's say we get a 45 to 60 day escrow. We're going to need to repool a new tri-merge because that credit is now expired. And what happened was I shared with the client, oh, you have this collection, it has no bearance on the loan, but I just wanted to share with you, this is what's reporting. I can still get your loan closed. However, maybe you want to in time take care of this, or in 7 to 10 years, it's going to go away. Well, I guess it bugged the client so much because it wasn't theirs. It belonged to a friend who they shared, I guess, an apartment with at one time. And it was a utility that was reported as a default collection on their credit report. So they took care of it thinking that was going to be a good thing. At that moment, they paid it. And then when and didn't tell me, and then when I had to repull their credit report, it significantly killed their FICO scores because that showed up as a paid collection. It was no longer a 5-year reporting collection. It is now an immediate paid collection. So that was a big storm at the end when we should have been closing happily. So I do not suggest to take care of those credit matters during your transaction.
I hear you. And I mean, that leads right into my next question, which is, what have you seen as the biggest mistakes people make credit-wise, especially as it relates to, on the verge of purchasing a home?
That is one of them. Another is purchasing a large vehicle or furniture or appliances that you're getting excited about. When you're going to be home shopping in the next 6 months, I would refrain from doing any large purchases. Don't buy the vehicle. Don't get excited and buy the furniture, or don't start buying anything until after you buy your house, because $100 payment you make on any credit, $100 monthly payment takes away $20,000 of your purchasing power.
Oh,
So
wow.
imagine if you go and you get that amazing vehicle that you've been dreaming about for months. We all have that dream, and that payment is $600, $700, $800. It's just going to take away your dream of buying the house that you want, because you're going to have to buy lesser of a home because of that large payment.
Yeah. Well, I mean, I guess I'm a little bit ahead of the game though, because I don't dream about cars. I dream about like cigars and scotch and stuff. So,
well, those are small purchases and those don't get financed. So I just tell folks, don't make any large purchases prior to home shopping. Don't make payoffs of collections. Don't close accounts. Check with your mortgage loan officer first. And you can happily buy anything your heart desires after we fund your loan and record with the county.
Gotcha. All right. Good advice. So you spoke on a couple ways on how people can build and improve credit scores. Also, the non-traditional way that you'd be able to guide them through. Are there any other resources you would recommend for someone looking to build or improve credit score?
Other than establishing their credit, as I shared, you can reach out to a loan officer like myself and to go over your credit with you and run through simulators if need be. I do not suggest to go and start with a credit service company, such as where they try to negotiate balances or interest rates for you, because that being in a credit counseling service can have the same effect of recently becoming or foreclosing on a home. So it is not a good thing to have reporting on your credit.
Mhm.
So it's always best to reach out to a loan mortgage professional to go over your options with you and give you that guidance.
Gotcha. Gotcha. Okay. Um, so I'm going to pivot into this particular question now. So, as far as misconceptions out there that you've seen about what a credit score is, how it either hurts or helps, and same thing with the history, right? What are the biggest misconceptions you've seen um, about how the credit score and history affects home ownership or applying for a home loan?
I would say the biggest misconception is having no credit is going to hinder you on purchasing a home, or having um, there are some loans that aren't very FICO driven. Our VA loans, our FHA loans, we can work with you on that. However, you want to be at least a 680 in today's market, because we are very FICO driven on most of our products. And that also gives you the opportunity to get the most affordable rate. So I would say the biggest misconception is just because you don't have credit, or if you're a foreign international buyer, like let's say if you have somebody living in Australia who wants to purchase out here in the States, we do have that ability to also run a foreign international credit report. But just because you don't have credit doesn't mean that I can't help you today. And if you have bad credit, it doesn't mean that you don't have the ability to buy. It just may take time to help
Okay.
you rebuild. And I have no problem with guiding folks through that. We've all been there and we've all started off in life. So I'd be humbly happy to do so and help guide
Okay.
them.
So basically, you're saying that the stigma out there that if you mess up your credit, then you're forever lost. What you're
Correct.
saying is there's always a way back, and you can improve it. You can reach out for help, and actually build it right back to where you can purchase a home later on.
Yes, even after BKs, even after foreclosures, short sales, those are also something that you have a seasoning period to be out of the I can no longer get a home loan. So we can
Okay,
also guide you through those aspects.
gotcha,
Mhm.
gotcha. So I think as far as my questions are concerned, I think that just about wraps it up for what I had planned. I'm gonna, give the floor to you for anything that you wanted to throw out. It could be, generalizations or what you believe are the most important factoids that you want to make sure people understand. Just please, floor is yours for a little bit.
Yeah, I just like to emphasize not to buy anything large and finance it before you buy your home, because it takes away your buying power. It could also affect your credit score, because depending on how recent your purchase is, those inquiries can be a detriment to your score. Because when you go car shopping, sometimes they run 3 to 4 different banks to get the best rate for you, or you may not qualify for one and they have to run other scenarios. Um, let's see what else. Don't pay off and close good credit history. You can pay off your accounts, keep them open. Don't pay off collections. If you are going to go that route to better your score, what you can ask those creditors, and depending on the creditor, they may not be willing to do so, but at times they will. If you pay it off in full, they will give you a letter saying your account has been paid in full, and it will now be removed from all bureaus reporting. So you have that letter from them showing that it's no longer in collection, that they will be removing it from all bureaus. That is something that is what you can do with a collection, because if you don't have that letter, it's just going to show paid collection, and it's going to have an adverse effect on your scores. But with that letter, I can take it also to the bureaus and help rescore you if the creditor themselves hasn't removed it from your credit, because sometimes it can take them 6 months to a year until they feel like removing it. But as long as you get that letter and they promise to give you that, I would not pay the collection off without speaking to your loan officer first. And then just having an array of credit, installment loan, to revolving credit cards, keep the balances below 25%, pay all your credit on time. Any oops within 12 months can have an adverse effect. And also, before buying a house, don't go shopping for a car, furniture, department store, because having those inquiries along with mine will have an effect on your credit score, because those stay on your factors as far as scoring for 12 months.
Okay.
Yeah.
All right. That's a good wrap up right there. Okay. So, as I understand it, you are currently licensed in California and Colorado, correct?
Yes, correct.
All right. So, if people, happen to see this and they're in California or Colorado, how can they reach out to you to get some of this advice?
I have an email. It's misty@fortitudemortgage.us. My office line is 719-358-6162. And you can find us on the web, fortitudemortgage.us.
Okay. So I'm going to have all that in the description of the video. So anybody that wants to reach out will have easy access there. I am going to do one final thing, though. This is the first time I'm going to do it. Usually, when you see some of these top-notch guys doing interviews, they'll have like a rapid fire round at the end of the session, right? I'm going to do a rapid fire round.
All right, let's do it.
Right? And it's not going to be serious. It's going to be some trivial things that I like to talk about, right? It's drinking and eating. That's it. Okay, so I got 3 questions. First question is coffee or tea?
Depends on the time of day. Morning is coffee, tea is the evening.
Is it? Okay, so it's split. You're splitting it down the middle.
Yes.
All right. Liquor or mixed fruity drinks?
Ooh, I'm actually more of a beer wine girl, and the beer in Colorado is amazing, but I would go mixed fruity before straight liquor.
All right. And then the most important one is muffins or cupcakes?
Definitely a muffin.
There we go. I'm down with the muffins too. The muffins is where I'm at.
That they are.
So definitely appreciate it. And for everyone out there, if you appreciate the tips, advice, and interviews that I'm doing, please give this video a like. Reach out to Misty. She is an amazing loan officer. And please subscribe to the channel so you don't miss any of the weekly interviews, tips, and advice that I'm giving. Thanks much.